Welcome to the Forex, Crypto, and Stock courses. This is the first ever complete and step-by-step Forex, Crypto, and Stock free courses from basic to professional that presents to you by Meta Online Business Club. The content of this course is only for educational purposes. It is not any financial advice. If you want to watch this course for free, please subscribe to our channel now. Forex, Crypto, and Stock courses content. We are on the class 5 and still on the chapter 1, which is about the money. Chapter 1, Money. This chapter includes 6 courses. Lesson 1, Lesson 2, Lesson 3, Lesson 4. Today, we are on the lesson 5, which is types of money. So if you are new to this course, we recommend you to watch the lesson 1 up to lesson 4 before you start the lesson 5. Let's start the lesson 5. Types of money. Up to date, the money at least have these 5 types. 1. Commodity money. Commodity money is one of the oldest types of money derived from natural resources and is used today as well, such as gold and silver. Although the commodity money practically not used like fiat money, but due to their highly liquidable behavior in the market, their equivalent value is always payable with fiat money. Commodity money advantage. 1. High liquidity. Liquidity describes the degree to which an asset or security can be quickly bought or sold in the market without affecting the asset's price or value. So commodity money always have a very high liquidity. For instance, gold or silver. Anytime you can change it to the fiat money. Second, low inflations. As the gold or silver are not easily accessible, so they have a low inflations. It's not like fiat money that is printing by the government. Third, commodity money has an inherent value. For understanding the inherent value, this may give you an example. For instance, gold, which is a commodity money, but it has an inherent value. It means that beside gold, which is using as a money, we can use it in a jewelry or we can use it in a technological productions. So even if you are not use gold as a money, still it has a value because we can use it in any other industries such as jewelry or technology. So it means that always there is a demand for it and its price could be determined based on the supply and demand on the market. But paper money or printed money, they only can be used as a medium of exchange and as a value of goods and services. But we cannot eat the paper money and we cannot use it in any other industry. That is why we are saying that the paper money doesn't have any inherent value like commodity money. The disadvantage of commodity money. 1. Heavy to transport. 2. Difficult to store. So if you have a 5, 10 or 20 kg of gold or maybe more than that, so always it's difficult to be transported for higher transactions from one place to another place. And always the commodity money is difficult to be stored. You know that there is lots of risk and there is also a big place is required for storing the commodity money. 2. Fiat money. Fiat is a Latin word that means let it be done. Fiat money is a banknote printed by the government and enters into the economic cycle. Fiat money is not supported by any other physical assets such as gold or silver, but it's granted by the government. Government-issued fiat money banknotes were used first during the 11th century in China. We already have discussed about the invention of the fiat money for the first time on the lesson 1. So if you want to watch the invention of the money and fiat money in detail, please click on the link in the descriptions below. Fiat money started to be predominant during the 20th century, since President Richard Nixon's decision to stop the US dollar convertibility to gold in 1971. We already have discussed the Nixon shock and emerging of fiat money on the 3rd lesson. If you want to know about the emerging of fiat money and Nixon shock in detail, please click on the link in the description below. Printed currency value depends on the factors such as economic growth and monetary policy. Fiat money is also called floating money because it is value determined by the open market based on the supply and demand without interference by governments. Advantage of fiat money. Fiat money gives governments greater flexibility to manage their own currency, set monetary policy, and stabilize global market. It also allows for fractional reserve banking, which lets commercial banks multiply the amount of money on hand to meet demand from borrowers. Good example is during the coronavirus. The government printed more money and injected into the economic cycle. If it was gold-backed monetary system economy, the government was not able to print more money to inject into the economic cycle. Disadvantage of fiat money. 1. Not a foolproof way to protect the economy. The mortgage crisis of 2007 and subsequent financial meltdown, however, tempered the belief that the central banks could necessarily prevent depressions or serious recessions by regulating the money supply. A currency tied to gold, for example, is generally more stable than fiat money because of the limited supply of gold. Second, risk of inflation and opportunity for a bubble. There are more opportunities for creation of bubbles with fiat money due to its unlimited supply. The African nation of Zimbabwe provided an example of the worst-case scenario of inflation in the early 21st century. In response to serious economic problems, the country's central bank began to print money at a staggering pace, resulting in a hyperinflation. Experts suggest the currency lost 99.9% of its value during this time. Prices rose rapidly and consumers were forced to carry bags of money just to purchase basic staples. At the height of crisis, the Zimbabwe government was forced to issue 100 trillion Zimbabwean dollar note. When inflation hit 230 million % in 2009, the country's reserve bank declared the US dollar as its official currency. 1 trillion Zimbabwean dollar could be exchanged for US dollars until the end of April 2016, but it was worth only about $0.4 or 40 cents. So as a trader, you must always consider nothing is granted in fiat money. So always be ready for a big turbulence in the forex market to minimize your loss and risk. And never risk all your assets in a fiat currency. This is very important for you as a traders, that no fiat currency can keep its value for a long time. There's always inflations and a chance of bubble or hyperinflations in the market. Third, electronic money. Electronic money is a cashless payment system that acts as a medium of exchange and has the same value of fiat money. With the advancement of technology, the use of electronic money has become widespread and practical. Have you thought while you send money through an online banking system or buy anything online, you transfer cash? The answer is no. So what do you transfer then? The answer is it's electronic money or only numbers. Only the number are transferred from buyer's account to seller of the goods or services. That's why it's called written money as well. And these numbers are payable by the bank in physical money. Today, most money transfers are made through the banks via electronic money payment system within a second in the speed of light. So let me tell you about the advantage of electronic money that made it most usable and reliable. The good example of electronic money are credit card, Visa card, MasterCard, and any other types of electronic payment method such as PayPal and many other payments of electronic money transfer, which is common nowadays. It is mentionable that electronic money has the same specifications of fiat money, but only difference is electronic money does not print. It is coded number of an algorithmic system with the same specifications of fiat money that we have discussed earlier. Advantage of electronic money. 1. The ability to move quickly at the speed of light. 2. Better record keeping. 3. The ability to move large amount of money without any physical burden. Disadvantage of electronic money. 1. Cybercrime and hacking. 2. User must have minimal level of training and knowledge, especially with more complicated form of electronic money. 3. Both hardware, software, and power or electricity required to perform transfer of electronic money. History of electronic money. Electronic money was first mentioned in a paper published in American Institute of Banking Journal in 1982. It refers to an electronic payment system first created in early 1980s. In 1982, two researchers, John Beck and Alan Foles from Bank of England, published a paper that introduced electronic money, a kind of money that can be carried on a microchip card and used to pay for goods and services electronically. In this paper, the researchers defined 3 attributes of electronic money. It can be transmitted by the computer, secure, and all merchants accepted. The electronic money concept was widely accepted at that time, but the technology to transmit money was only in development. In 1984, the first real electronic money transactions was implemented by the Automated Clearing House ACH in the United States, where the financial data was transmitted over the phone network. In 1990, IBM developed the first real electronic money technology in the United States. The IBM Electronic Cash Account System, or ICAS, implemented the first real electronic money transactions of an individual on the IBM network and on the New York Stock Exchange. These ICAS transactions were made possible by using the smart cards developed by IBM. In 1995, the first electronic banking transactions, EBT, were made possible by the use of the so-called smart chip, which was developed by Visa and MasterCard. The first EBT in the United States was implemented using the Visa chips. In 1999, the first real payment service in the United States was made by Visa and MasterCard and is implemented by the so-called electronic fund transfers, EFT. In 2000, this service was introduced in Europe by so-called electronic money services, or EMS. In 2001, the electronic money transactions (EMT) was made available by MasterCard in the United States. In 2002, the electronic money service (EMS) was introduced in Europe. On December 21, 2005, electronic cash was first used by Visa and later by all other EMV networks for the first actual transactions of person in the world. For the first time in November 2006, the electronic cash for online payment (ECOP) was introduced. It is used to pay for goods online without using a card. 4. Fiduciary money. A document that is exchanged as a credit or contract between buyer and seller as a means of exchanging material or services in the form of a check or a contract and has the ability to liquidate is called fiduciary or credit money. In exchange or receipt of these types of money, there is no continuous transaction during the delivery of the goods or services. But the first is the provision of services or the delivery of the goods. Then the money is paid to the seller or service provider on the basis of credit, such as government or company's contract or contract with any individual. Or let me explain you in this way. While you get contract from government or any company, you have to provide the required goods or services based on the contract prior they pay you any money. But you believe that the contract is credential for your payment after implementing the contract. Indeed, it is the contract which acts as a money for you. Or even based on that contract, you can get loan from banks or any other individual for finishing the contract. So that contract going to be called a fiduciary money. 5th, cryptocurrency. Cryptocurrency is a digital or virtual store of value that is used as a medium of exchange. Cryptocurrency is secured by cryptography, which makes it nearly impossible to counterfeit or double spend. Many cryptocurrencies are decentralized network based on blockchain technology as a distributed ledger enforced by a disparate network of computers. So these are the 5 types of money. And we'll discuss cryptocurrency in separate chapter, and you will learn everything regarding the cryptocurrency from A to Z, from creations of the cryptocurrency and the trading and investing of cryptocurrency. So don't forget, next lesson is currency code and currency pair in foreign exchange or forex. That's very important lesson. Also, do not forget to subscribe to our channel now if you want to watch all these courses for free.